Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 4th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. You know, it being a Monday, not a whole lot of data, but we do have Great Britain's construction PMI, which is Purchasing Managers Index. Came in at 52.5, expected to be 52 even, so slightly better than expected there. Here in the United States, we got factory orders coming in at a negative 0.8, expected to be a negative 0.4. No revisions to the last month's numbers, so a little bit lower than expected on the factory orders. It's really going to have to show up later in the PMI, which is really what we look for. We got PMI out of Great Britain. Later on this week, we get non-manufacturing ISM PMI, which is our big number too, and then we get then we get crude oil inventories later on in the week as well. All right, so let's get on with the overall economic data overall markets. We got the markets moving lower here in crude oil, as there's probably more of a flight to safety. There is a jubilation going on in equities right now, but crude oil kind of suffering from that, as we started to see it slide below the 80, slide below the 38 Fibonacci level. Sorry, you guys. So crude oil moving lower today. Gold futures lower on the day, but higher than they were when we first opened. You know, some of that having to do with the equity rally that we're seeing. But gold futures pretty much stuck sideways right now. Bitcoin futures unchanged for all intents and purposes, maybe up $50, but pretty quiet in there. And we're seeing this start to lose a little bit of momentum. Thought it looked like it might be building a bottom here. It might be losing a little bit of steam, it looks like. No surprise here to see that bonds are slightly off on the day. Let's take a look at the equities with the VIX coming off. That is a pretty good indication. We have equities moving higher. Dow Jones up almost 200 points right now above the 23 Fibonacci level. That is for the extensions. That has acted as support and resistance. I expect it to act as support resistance right now or later on this week as well. With the NASDAQ moving up about 42 points after Friday's massive rally, no surprise here. Shorts are on their heels right now, trying to scramble with the NASDAQ moving higher. E-mini S&P is up also and breaking above that 61 Fibonacci level for them. That's on the extensions. That's an important level. You can see it acted as resistance several times before, finally breaking through on that. So the bulls will celebrate that for sure. As long as we can settle up there and don't come back down to very close to where Friday's high was, this will look like a nice move to the upside. If we look at the 30-minute bar chart or 30-minute candles, you can see overnight inventory got long and didn't even really make much of an attempt, or at least a very weak attempt at trying to flush those guys out. Right now, middle of the range for the most part. Quiet day, low volume going on. It's a pretty quiet summer market for the most part. Okay, let's talk about a couple of things that I've done. 3M. I was working on trying to get out of 3M past couple of days. If you guys remember, I put this order in as about 50% of my max profit, and I had on the June 190 puts in there that originally sold for 94 cents. I told you guys I was trying to get out. Finally got filled at 42 cents, so slightly better than 50% of my max profit, but I said I was wanting to get out of these by the end of the day. And MRK, I believe I talked about on Friday's webinar, I got out of this one as well. You can probably get out of it much better than where I did, but I had on the June 55 puts in there that I originally sold for right around 32 cents, bought them back for 9 cents. So both of those trades are out, starting to cover just about any trade that I have that's 50% of max profit. I'm looking at Disney. It's getting close. So I have a working order in Disney with its move down. Remember, I'm short some calls in there, so that's working out in my direction. They've been going south, so I don't think we're going to get up anywhere close to where my calls are right now. So I'm not worried about that. Looking for 50% of my max profit on Disney as well. That's it for today. Like I said, it's going to be hit or miss. Tomorrow I'm probably not going to be doing the daily market commentary because I'm going to be shooting a podcast with Bloomberg that's going to be released later on this month, and a couple of other things running around in New York. So reach out to me if you guys want to hook up for a drink, all right? That's about it. Give me a thumbs up, thumbs down, a like or dislike on this video. If you're giving me a dislike, let me know what I'm doing wrong. Also, tomorrow, not only am I doing Bloomberg, I'm also with Dave Mecklenburg doing Festival of Traders. It's going to be a real busy week. And then Thursday, we've got our webinar, so check that out at Pro Trader Strategies. All right? Crazy week. Try and follow along with me, all right? If you can't take that, take it easy.